Welcome. In this video, will Zbcn coin bullish wave come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is viewed from a broader perspective, it becomes evident that price movements have shown a certain cyclicality in the past, and this cyclicality appears to be repeating itself once again. In particular, the price behavior observed during previous upward periods provides valuable insight into current developments and offers important clues for investors. At first glance, it can be seen that after the first upward movement in the past, a correction occurred. But this correction was constructive in nature and paved the way for a stronger upward move. The second major upward wave that followed strengthened market participants' confidence, demonstrated the power of the trend, and produced positive signals indicating the continuation of the bull market. In this context, the current pullback appears to share structural similarities with past corrections. The behavior of price during previous bullish scenarios suggests that the current decline is also a correction and is essentially laying the groundwork for a new upward move. As before, a strong rally may occur following this correction. By nature, healthy uptrends are always supported by small or medium-sized pullbacks. This allows investors to take profits and new buyers to enter the market at better levels. Looking at the first upward movement in the past, we see that it occurred with significant strength, volume, and conviction. Such rallies typically signal the start of a trend. However, no price movement is linear. The market, by its nature, needs to take a breather. Therefore, the decline that followed this initial major rise was seen as a mere correction from a technical standpoint, and investors took the opportunity to open new buy positions. As a result, the price resumed its upward movement after this correction and succeeded in surpassing the previous high. The second major upward wave not only broke past the prior peak, but also sent a clear message about market direction. Buyers are still strong, demand is ongoing, and the market structure remains positive. At this point, many investors may have questioned the sustainability of the rally. However, such formations are among the clearest indicators of strong trends. New higher highs followed by higher lows form the foundation of an uptrend. Therefore, the current pullback, when viewed in the bigger picture, appears to be more of a healthy correction. What many professional investors and technical analysis experts pay attention to are the potential opportunities that arise after such pullbacks. These correction periods are when major players expand their positions at better prices and re-enter the market with strength. This creates significant buying pressure in the market and leads to a sharp upward movement in prices. From a psychological standpoint, rallies that occur after such declines carry great importance. These repeating patterns represent periods when market confidence is renewed and investors become hopeful once again. Especially if the recent drop rebounds from a key support level, it will boost market sentiment not just technically, but also psychologically. In the past, similar recoveries following pullbacks have captured investor attention and led to substantial capital inflows. In short, the current downward movement closely resembles past periods that were followed by strong rallies. This similarity is highly valuable in terms of technical analysis, as historical data suggests that the same pattern could repeat and the market may once again make a similar positive reversal. Although some investors may be cautious at this time, previous experiences after similar corrections show that such caution may soon give way to excitement and a renewed willingness to buy. But we can't make a decision based on this alone. Let's take a look at other metrics as well. Stay tuned. When the chart is carefully examined, it is evident that the price movements follow a highly structured pattern within the framework of the Elliott wave theory. At its current position, the price appears to be either completing or has already completed the fourth wave of the classic five-wave impulsive structure. This signals the beginning of an exciting phase from a technical analysis perspective, as according to Elliott theory, the fifth wave typically begins after the fourth wave, often one of the strongest and most notable stages of the trend. This final wave is generally a period in which investor and buyer interest intensifies again, the trend gains renewed momentum, and strong price movements occur. Fourth waves, as part of the Elliott wave structure, typically progress in a sideways or slightly corrective manner. This wave appears after the strong momentum of the third wave and often represents a brief phase of profit-taking or sideways consolidation. At this point, the price takes a breather, but the overall trend remains intact. For this reason, the current structure suggests from a technical standpoint that the uptrend is not over. In fact, a new impulsive movement may be about to begin. Another important point to remember is that the fifth wave holds significant value from an investor psychology perspective. This wave generally represents periods when the market is filled with positive sentiment, news flow is favorable, and a broader group of investors begins to participate. This creates a foundation that facilitates upward price movement. When technical analysis, market psychology, and investor interest align, the resulting uptrends tend to be much more robust and sustainable. The fifth wave also has a unique characteristic. It often continues up to the upper band of a rising channel structure and can exceed the previous highs of the trend. This presents major profit opportunities for investors. Additionally, during this stage, there is usually an increase in media coverage related to price gains, which draws the attention of retail investors once again. This kind of synergy further strengthens the power of the fifth wave. If the current fourth wave on the chart is unfolding as a sideways or slightly sloped correction, it is generally considered a very healthy structure. Because if the third wave was very sharp and strong, it is expected that the following fourth wave will be more sideways. This indicates that the market is going through a balancing process and that investors are repositioning. Therefore, the current price movements should not be interpreted as the result of a chaotic or weak trend, but rather as a calm phase preceding a stronger move. Moreover, if volume analysis during this fourth wave shows a declining volume trend, it is also a highly positive signal. A decrease in volume indicates that selling pressure is waning, and investors prefer to hold rather than sell their assets. This psychological balance creates an ideal foundation for the start of a new rally. Toward the end of the fourth wave, if volume begins to rise again, this is typically one of the strongest signals that the fifth wave is about to begin. If support and resistance zones are considered alongside technical analysis, the price being near a support level right now is a critical advantage. At this point, both technical indicators and psychological thresholds align to support bullish breakouts. For many technical traders, the Elliott wave theory is a powerful tool for understanding market structure. Especially the fifth waves that follow the fourth are among the most striking periods in terms of both momentum and price target potential. MACD, which is a very important momentum indicator in technical analysis, has started to give very positive signals promising investors in the current market structure. In particular, the intersection of the MACD line with the signal line and the fact that this intersection has occurred in the lower zone, that is, below the zero level, can be considered as a harbinger of possible upward movements in the future. This type of lower crossover is usually seen at the beginning of a bullish move and technically indicates that prices tend to rebound upwards from their lows. This MACD structure is valuable in that it shows that momentum is starting to turn from negative to positive. When the MACD line starts to cut upwards below the signal line, this is considered by most technical analysts as a signal of a strengthening buying pressure in the market. Moreover, if this crossover occurs well below the zero line and the MACD line is heading upwards, this is often considered an early signal. In other words, before prices make a big jump, this technical indicator is a get-ready signal to traders. At this stage, it is a much stronger signal if the MACD approaches or breaks the zero level on the upside. It is important that the MACD moves above zero. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.